our criteria would be sort of relatively low country risk, reasonable grade, or low cost to bring into production for us to be shortlisting projects.
Brett Smith, Executive Director of MetalsX, among many other titles, which we'll get to. When the first time you probably were shown, or someone showed you some commentary that I'd made about MetalsX, did you ever think you'd be invited to sit in here and have a conversation with us, or do you think these guys are muppets?
I didn't think muppets. I understand what you guys do, and I think one of you came along to one of our AGMs, and there was a chance to have a bit of a chat with you then. And it's I like what you guys do. I think it's interesting. Your mix of guests brings different perspectives. Hot Copper's got a certain following. You guys present a pretty balanced view of things. Yeah,
I appreciate that. Glad to be called balanced, mate.
Yeah.
Pretty balanced.
Don't
get ahead of yourself.
Which Muppets would you like to have been?
I don't know. I reflect on the journey it's been talking about MetalsX, and we're up front, ding ding ding, MetalsX shareholder. You also sit on the board of you've got the executive chair of non-executive chair of
Mount Gibson,
Mount Gibson, which
shareholder of.
We also got to do a ding 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 of as well. So we'll get the disclosures out of the way. We're conflicted, but we thought you'd be a very interesting person to talk to because of a few reasons. One is just our long relationship with the mystery of MetalsX, the continuous discourse we've had about capital allocation, the intrigue of this shareholder APAC, and the curious kind of like discount that APAC entities seem to trade at when they're quite cash generative, being MetalsX and Mount Gibson. Keen to unearth a lot of that. You're a very experienced operator. Like you were the COO of Asenco amongst many roles, and I just think there's a rich conversation to be had here about tin, about MetalsX, about capital allocation, about China. And we're delighted to have you accept our invitation to join us, Brett. Yeah.
Well, I think, given that I don't know when you bought into MetalsX, but I think when I came on the board, it was about 8 cents, 7.5 cents. It's now 87 cents. So I think regardless of whether, for any shareholder, I think that's been a pretty good turnaround.
It has indeed, and it's in one of the most fascinating commodities, one of the most fiercely loved commodities out there in the world of punters that follow the metals and mining space. So, yeah, tin. It's an endlessly fascinating commodity. The supply side story is extremely fascinating as well, and yeah, there's so much we want to talk about with regard to MetalsX. Where specifically do you want to kick this one off, Trav? Company or
let's go to the beginning, because when you came onto the chair, became chair, like MetalsX was a much more kind of complicated company. There was a distressed asset in Nifty, which was taking a lot of management time, attention, and capital.
Worse than management time. It was costing us $1.2 million a month.
Yeah.
In holding costs. It was it was Nifty, and it was the Wingalina nickel cobalt assets. This just looking at how we changed MetalsX. There's only one employee of MetalsX. That's me. I'm a firm believer in that companies generally have too much overhead, and so it had a big corporate office on the terrace, a whole bunch of guys who were doing stuff that probably didn't need to be done. And these assets which were just sucking cash, that the tin asset, which was their jewel, was mortgaged against a loan to support the development of Nifty. They were in breach of their banking covenants. They were. I'd like to use an F word that you probably have to edit out, but they were in serious bloody stress. So we had to look at, getting the overhead costs down as quickly as we can, finding a way of getting rid of those assets, which had value, but just we couldn't do everything at once. We couldn't maintain the cash burn, refinance the company, and fix the tin assets. It just wasn't possible to do everything. So I got rid of all the overhead, looked at APAC for a loan so that we could pay out the Citibank debt, That took the pressure off the, losing the tin asset because it was mortgaged against the tin asset. And then started to a sale process for Nifty. And I think we did quite well out of that, selling that to the guys now, the Cyprium / Pack Road guys are looking at turning that around. We've retained a significant, we got a fair bit of money for it. And then we've retained a significant number of convertible notes, which are now in the money, which will give us a return there. We spun off Wingalina into a separate listed company. Now, no one knew what was going to happen in Indonesia at that stage with the massive increase in the lateritic production there. But that looked a good strategy until all that production came online. And so we got rid of those two assets.
At one point, Nico had a pretty healthy market cap.
Oh, it did, because it's a great asset. It's one of the best undeveloped nickel cobalt assets in the world. It's just, it required, like all of the laterite jobs, it requires a huge amount of capex to get it started. But it's a great asset, and it'll eventually get built. So that freed us up just to focus on the tin. We at that stage had no debt, and then we started just looking at what we could do to improve the performance of the tin asset. It had been starved of capital because everything had flowed to Nifty. So we started to look at regional and near mine exploration because nothing had been spent on it, and doing the little things we could do to improve the productivity of the process plant.
Renison is actually making free cash at this point in time, the entire way through.
It's coming. It's just bubbling out of it.
Yeah. And so even when like MetalsX was distressed because of Nifty, effectively, Renison is the jewel that's still kind of propping things up.
Yeah. But that it's not a low cost mine. It has been shut down in the past when the tin price dropped. Yeah.
But we had that period in 21, 22 where tin just goes through the roof for a period. And the cash flow is really, really strong, right?
It's pretty strong now too.
Yeah, I mean, even today. But we're at a pretty healthy tin price. When you look back now, 37,000.
Oh, it's great. And I can't see significant increases on the supply side, which is going to erode that tin price in the medium term. I spend most of my time looking at potential acquisitions, and so I've looked at every tin project in the world more than once, and there just isn't, the guys in the Congo are going to complete their expansion, and that'll bring a bit more tin back on. I don't believe Indonesia ever stopped producing tin. It was just porous, so what was being leaked out through unofficial channels, but that concentrate didn't seem to disappear from the market. It just didn't flow through the official channels. And Myanmar's coming back on, but coming back on quite slowly.
So your friends at Yunnan, do they help give insight, obviously, on that Myanmar aspect? They'd have reasonable insight into that, wouldn't they?
Well, they buy a significant amount of their tin from Myanmar, but I was up in Yunnan province a couple of weeks ago, which is on the sort of border with Vietnam and that sort of area. They're talking to all of the smaller smelters who also bought a lot of tin from Myanmar. And, we got one view in Australia as to what was happening in Myanmar. You talk to the people there and you got a very different view of what was happening. And that involved trying to balance the relative power of the two different militias. And so there's China also wanted to see certain stability in that region. So there was some use of Chinese purchasing power or stopping purchasing, which could be used to help balance the power between those militias. So it's a lot more complicated than we thought, which was just that these guys decided not to sell tin. Perhaps no one was buying tin from them. And that's slowly starting to come back on now, but because they had been, they'd had disrupted production and all sorts of other problems, it's only ramping up fairly slowly. But there's a global shortage of tin concentrate. Just looking at all the little, what's happening in copper where people are dropping their treatment charges because there just isn't enough copper con. That's going to happen in tin because a lot of the old smelters had their own mines, so they had a supply chain to provide concentrate or to provide tin to them. Those mines now have dropped in grade or are exhausted. So at some stage there'll have to be a consolidation because some of these smelters can't exist competing at lower and lower treatment charges for tin concentrate. So I think we're going to see, short term, we're going to see treatment charges drop. Longer term, we're going to have to see a consolidation of that tin smelting capacity, particularly in China, because the smaller guys who had their own mines and had their own concentrators don't have the raw material from their own supply chain, and they're going to have to compete globally to buy the concentrate, and that's going to keep the price up. Yeah.
Can you speak to the point there, just one more on Myanmar, of the higher grade resources actually being mined out? Like, is it a point of them not selling and these sorts of things, or?
Well, I think that there won't be a lot of what we would classify from a Western perspective of exploration in Myanmar. So there probably is opportunity for people to go back and have a look at it with a different exploration lens on. But what's happening there is people just mining what's an existing known resource, and that gets depleted relatively quickly.
This is the Myanmar complex we're speaking about specifically in Myanmar?
Yes. Yeah. Is that what you were asking?
Yeah. Exactly.
And is that like, what is the nature of that like mining operation? Is it just like,
it's a combination of hard rock and alluvial, depending on where you are.
Yeah.
And some of it is quite small scale.
Yeah.
Like you'd see in parts of Africa.
I've tried to look at it on Google Earth and I just get confused. Yeah.
I do know concentrate traders who are going into Myanmar and actually talking and buying from these guys, and they're describing it to me like I remember how the Congo was 35 years ago, where there's sort of small guys collecting, semi-beneficiated product, putting it in bags. There's other contractors buying those bags in trucks and then taking them to places, and then they're being further processed. So it's sort of artesian. It's not a very in places it's not a very sophisticated operation. So that means it's difficult to ramp up quickly.
Parts of the Congo are still like that, aren't they?
No, they are.
I think they still might be. So this all ties in really well, Brett, with you assessing the options out there and M&A, and you've obviously done some deals. Elementos comes to mind, First Tin as well. So how do you kind of pick and choose and speak to the assets that you have sort of done a deal with?
It's nice to have more than one horse in a race. So that really is our strategy, that both of these we think are good projects. I used to be, even before I was involved in MetalsX, I used to be on the board of Elementos. So I've always liked that project. That project in Spain it's a good low-cost open cut, simple concentrator, relatively sensible operating costs in an area which needs economic development. So they're the sort of things that you would think would make it a good project to develop. Europe is complicated for permitting. I know that from Dragon, where it's taken us longer than you'd ever expect to get permits for new mines. But the Elementos guys have taken their feedback from their previous permitting applications. They've learnt what was necessary now to resubmit, and they've done a good job sort of changing the some of the layouts, considering what the water management issues are, and it's usually water in Europe, which is a permitting issue, and have resubmitted the permits. And I think they've got a pretty good chance of seeing those within 6 to 8 months.
Wow.
And that is really the key for having confidence, because all of these projects, you can do. Usually the metallurgy is okay. Usually everything else you can manage, but the permitting is always such an uncertainty wherever you're developing a mining project these days, that until you have confidence that you're going to get the permit, taking that risk on a major investment is just difficult.
So instead of taking a full risk, you've bought a very considerable seat at the table with a substantial shareholding, awaiting a permitting outcome. Is that the right interpretation?
That's the same thing we did with First Tin.
Yeah.
So the idea there is that we can make a decision as to do we do a LISCO play, or do we look at a asset-related joint venture, or some other form of investment at a asset level, to enable us to have a significant stake in the development of the project, both the First Tin project and the Elementos project. Yeah.
Yeah. Yeah, and first tin, like as it comes to permitting for them, do you think there's a similar timeline in front of them?
Yeah, it's New South Wales, but it's in an area which has been a historic tin mining area. They've done their public consultations just recently, and there's a trigger in New South Wales that if you get more than 50 objections, you have to follow a longer permitting path. They only got 5 or 6, so that they're not on the extended path for the permitting, which is great news. And again, they've done a very considered not rushed permit application. It's a very benign. It's not a sulfide type ore body, so there's no acid rock draining type issues. It's the waste. There's very little overburden because they've basically classified everything as ore. But it won't provide a significant environmental legacy. So it should be a relatively, and it's in the middle of nowhere. There's just bloody feral pigs and prickly pears around there. So there's no environmental damage that you're going to do to that area.
Yeah. The thing that, like with first tin, it's a lower grade.
Yeah,
like
I didn't understand. To be honest, I didn't understand how it could work at that grade, because normally, if something's less than 1% tin, I don't even look at it.
Yeah, and what changed the game there?
The very simple recovery process flowchart that you need to recover the tin. It's basically just grind and gravity. The cassiterite is a very coarse crystal, and in crushing, it fractures and separates quite easily. So you can just screen and then a gravity type circuit to recover the cassiterite. I think there's upside. Being a junior, it's looked at increasing the tons of tin in the ground and the size of the thing as high as possible, because they think that's the right thing to do as a junior. I think when you actually come to development, you could look at the same way you'd mine a narrow grade gold system, where you'd be digging selective, even if you're open pitting it, you'd dig selective trenches rather than just do a big mass bulk excavation process. When you can see the ore body, the cassiterite is in bands. Every couple of metres there's another band of cassiterite. If you looked at you'd reduce the total tons of tin, but I think you'd bring up the grade you were processing, and that may affect the economics. But it works the way they've done the financial model, but I think you could improve it later as you move closer to actually developing a mine plan.
Elementos' ore pesa as well is far below 1%.
Yeah. But it's a very low cost mining. Very low cost mining, yeah.
And what should we read into the assets and the projects around the world that MetalsX hasn't been able to do a deal with, given that you've looked under the hood at as many as you can?
Well, when you say we haven't yet. Haven't yet. Of course, Stellar is interesting because it's just around the corner to us, and we're in constant conversation with those guys. And I know Rusty well.
Yeah.
So there is a sensible collaboration in that area. One of the things that's interesting is we have a Rentals project, which is a tailings, and you guys seemed prejudiced towards or prejudiced against tailings reprocessing projects. If I've watched enough of your podcasts,
you're the mining engineer, not me.
You've won us over.
I think I've come to appreciate I was being critical of that relative to returns to shareholders that could be distributed, and the IRR on Rentals for the capex it required. I was thinking, why don't you just buy back your stock? You're so cheap, yada yada. And we can get to that bit later, but we'll start.
Well,
with
we'll talk
Rentals.
about capital, and we'll talk about capital allocation and investment theories and all that sort of stuff. But MMG up the road have got a problem with tailings. Anyone who tries to develop a new mine in that area is going to have an issue with tailings. We're out of the Tarquine. We've got the NGOs are quite happy with what we're doing down there in terms of the tailings thing. So having a single large tailings resource that the regional mines all pump tailings to could be an easier solution for a number of players to get permitting and to develop their projects.
That'd not be quite an expensive endeavour to pump. How far would the tailings have to be pumped from all of these operations?
From Stellar or from MMG?
From MMG, yeah.
No, we're just up the road.
Okay. Yeah.
Both, and you can pump tailings relatively cheaply.
Okay.
Yeah.
Yeah. That's interesting. Yeah. And
So Stella. So coming back to that, Stella's an obvious one that's interesting. There's the lower grade stuff up in North Queensland in Australia's. I don't think that's that interesting. I had a look at the stuff in Brazil when they were selling the stuff up in the Amazon and the smelter in São Paulo. The stuff in Morocco's interesting, but maybe a bit late now for us to get involved in that. Congo's, my board is probably not that interested in Africa, though I'm not scared of Africa. I've worked in the Congo, Sasenko, and many different places in Africa. So I think our criteria would be sort of relatively low country risk, reasonable grade, or low cost to bring into production, and a reasonable way down the permitting time scale for us to be shortlisting projects. Yeah.
Yeah. So we'll go to Stella first, but with Stella, there's you say JV. I think synergies in my head that could be had there. It's just down the road. The one thought I have though is like MetalsX's interest in Renison is via this JV, and maybe you can give some context on the JV. But are there any limitations to doing anything with Stella? Does it have to be done at that JV level?
Stella is in the area of influence under the JV's definition, so it would have to be discussed at a JV level before anything was done.
Gotcha.
There's a sort of circle of so many kilometres around the asset, but that wouldn't be an impediment.
Yeah. And maybe we should talk about the JV as well. There's so many moving parts.
Sure.
For a company with one employee, there's a lot going on, Brett. The JV, like MetalsX, over the last 12 months has publicly been trying to potentially consolidate part of that JV. Can you add some colour on like how that situation came about, where it got to, and like what are the kind of restrictions or permitted things within that JV?
Renison is a 50-50 JV between MetalsX and Yunnan Australia. Yunnan Australia is a 20% owned by Yunnan, the Chinese smelting company, and 80% by GreenTech, a Hong Kong listed company, which is a single asset company. It has a small tin trading business, but its main asset and its only revenue source is really its revenue from that joint venture. They were suspended on the Hong Kong Stock Exchange because the auditors couldn't sign off on the accounts. So that made it that to us looked like an opportunity. We thought that with the suspension, there may be a number of shareholders who could be interested in selling. There's two major shareholders who own probably about between the pair of them, they own about 60% of the company. We thought we could probably mop up a number of the smaller shareholders and then look to use that as a platform for a bid for the whole company, or to look at doing what would be the equivalent of a 249D in Australia, to look at questioning the board and the reasons for the suspension. We did make a bid. It was a low bid. The guys in Hong Kong, being savvy, only a small number sold to us.
You did get some, though. You got some, yeah.
They thought that we'll come back and make another bid.
Yeah.
So we are considering, of course, another bid. And we have of course worked out what we think it's worth based on our EV value and what that revenue stream would be and everything. So,
but there's financial due diligence that.
Financial due diligence is difficult when it's under suspension because they can't legally release any information to us, which hasn't been released to all shareholders.
Right. So you're making some estimate, or you're making some estimate.
Well, we don't really want the listed Hong Kong entity.
Yeah.
We just want the revenue stream of their 80% of the joint venture.
Yeah.
That's what we'd like.
Yeah. And what's the status of
We have to wait after making a bid. Again, the Hong Kong regulators have rules which are different to Australia. There's a time period that we have to wait before we can make another bid.
Yeah.
And so that's sort of late December.
Yeah.
And I think they will, if they can't satisfy the requirements of the stock exchange, they'll be delisted in March or April.
Yeah.
So but we've got Chinese New Year in there, which is like Christmas in Australia in terms of when it is sensible to do or to look at tabling a transaction. So we've got to work through all of that timing, and to work out what the tin price has moved since we made our last bid, all of those sorts of things, to work out what is a sensible strategy for us to do.
Do you think those two shareholders, if they control like 60%, like do you think there's a world where there's a deal to be done at a reasonable price?
I don't think that they both agree on
Yeah.
what's happened with the suspension,
Right.
which gives us a door to one of them to
Right.
potentially negotiate a deal.
Gotcha. Well, that helps.
Not if he wants too much for it.
Yeah. Everything's got a price, but like if a deal can be done at a reasonable price, surely that is the most accretive thing you can do with your cash balance.
Yeah.
Would you agree?
Yeah. That's why we made a bid.
Yeah. And then with the JV dynamics, like covered, we'll go across the globe again. Are there any other like tin projects that you've looked over, undeveloped or otherwise, that just aren't on the radar of many people?
There's little stuff up in Nova Scotia. There's bits and pieces in some of the other around sort of that extension of that Congolese belt. There's smaller deposits in Africa, but again, they're all fairly small. Uganda's got a little bit. I think Bolivia's been a place that's been just forgotten because the government, being a socialist government and having a certain agenda, scared a lot of people. But I think if Rentals works, there's enormous deposits of tin tailings in Bolivia, which someone should have a look at.
Peru is a big producer of tin as well.
Yeah, well, it was the Peruvian guys who had the assets the Peruvian family who had the assets in Brazil who sold them out recently. So, yeah. But I think that's quite closely held. I don't think there's any interest to sell the Peruvian tin assets. Yeah.
Yeah, and those Bolivian ones are within the state-owned miner as well,
Yes,
so makes things a bit harder.
Yep.
So capital allocation, then.
This is
where you started with us, yeah?
It is.
Totally. I didn't understand the company as well as I do now, and I was a bit critical, but I'm glad that things I'm glad that there was the announcement of a buyback. I'll bet you didn't have to buy back much, but yeah.
Well, we would have bought back as much as, it was a function of the share price. We didn't set a limit onto how much we could buy. The share price started to move.
So this is an interesting point because most companies don't do a buyback and say, "Oh, we're only going to buy it back when the stock is less than or equal to a certain price."
Most do. Most of the ones, every buyback I've been involved with in a public company, the board has set a ceiling.
They've set a ceiling,
but not publicly indicated that ceiling.
Well, we didn't publicly indicate ours, did we?
Yeah. Well, you can infer it, but there's. I think it's more uncommon than not to have a just a flat. Yeah, ceiling price. You can have some sort of volume weighted allocation within a band or a range. But anyway, that's.
But I appreciate the discipline. I think that's the way buybacks should be done.
But you look at it look at the cash balance. What if they had just ploughed a hell of a lot more into the stock at low prices?
You would have pushed it to that level quite soon.
You would have moved the price above your ceiling.
You could do a tender offer at a. You know what I mean? If you just go. Okay, we're going to do a tender offer 10 cents above the current price, and we'll mop up everyone that wants to sell. We'll take it all.
Yeah. My view is you use a buyback to support a share price when you have other things. So, but when you have a macroeconomic change like an increase in the tin price, save your buyback capacity for when that's not there naturally supporting the tin price. So that was kind of the philosophy we followed. We have publicly stated since I've been on the board that as soon as we have franking credits, we'll relook at dividends. Yeah, so that we've said that at every AGM, and we will. If we needed to recommence a buyback because there wasn't support for the share price, it's still there. We would re-enable it. Yeah.
Yeah. Yeah.
That's the counter-cyclical approach as well, in contrast to what we saw in coal land a couple of years ago as well.
Yeah, and I can appreciate the value of that cash. It's not like, we've talked about all of the ways that can be deployed. There's great optionality that, that exists, not in just the organic, but also the inorganic stuff. And there'll be a time and place to deploy that cash. Like, you can't be opportunistic on your JV partner if you don't have the cash backing to support that. So I can understand and appreciate
I'd like us to be producing, through greater ownership of Renison, through the development of Rentails, through the development of one or both of the first tin and Elementos, 22,000 tonne of tin a year. Doubling what we produce now is just as Renison. And that's we want to be as bigger than Alphamin.
Yeah.
So that's our our strategy, and I think that will move, given, as you mentioned, the complexity of the tin market. If you can be producing sort of 20% of the world's tin concentrate, that you will get rated accordingly. Yeah.
Yeah. Let's talk about ratings because MetalsX, Mount Gibson, they always trade at just 1.5 times EBITDA, 2 times EBITDA at most, if they're even trading at positive EV.
Cash backing.
Yeah. They're two very different companies now. As I said, when I came on the board, we were 8 cents. We're now 87 cents.
Yeah.
So that's fixing itself by being consistent, by doing what you said you're going to do, and delivering on what a company's performance is. Poor old Mount Gibson, that was a disaster, that rockfall, totally unexpected. That section of the wall was maybe 200 metres long, 150 metres high, 3 metres thick, had 18-metre rock bolts in it, all very heavily bolted, meshed and shotcreted, and it fell within 5 seconds. Okay? So of course that's going to knock the share price down significantly. And I think also, if a mine is on its last 18 months of production, you're going to see an erosion of its share price because people, and it didn't really have a strategy of what it was going to do post Koolan.
Yeah.
And now it has. Yeah?
So that's now it has. But that's the bit I'm getting to is I think the market had, for better or for worse, there was a perception that these companies that have a very large shareholding from APAC, and maybe their real agenda is just to accumulate stuff, and maybe there's most shareholders in the market want to see some distribution of these big cash balances to them, and that generates the re-rate.
You guys have heard of FIRB?
Yeah.
How can APAC be accumulating beyond what FIRB will allow it to buy?
No. I mean, within the vehicle of not accumulating more shares, but let's say those entities can embark on their own capital allocation, decisions. Some of those decisions might be to pay a dividend, which other shareholders might want, but maybe might not be what APAC wants. And I think that was part of the market's, discount that has been applied to those.
I think a question came up in the Mount Gibson AGM the other day about dividends, and the CEO reminded the audience that it had paid out something like 320 million of dividends, up until it ran out of franking credits. Yeah, I think, I don't know, franking credits is a real consideration when you're thinking about paying dividends.
Yep.
Yeah. APAC, to me, has saved Tanami's ass, saved MetalsX's ass, and it did a lot to help Mount Gibson in terms of being a supportive shareholder when no one else was supporting them. And that I don't think has been generally understood. Providing unsecured loans, helping with restructure, all of those sorts of things, participating in placements or participating in rights issues to ensure there was funding. That saved a lot of those companies from going under.
I'd love to rip the curtain off here. What are the misconceptions about APAC? What do you think other people think APAC is, and what is the reality of the type of shareholder APAC is?
Well, APAC, when I was more involved with the management of APAC, I restructured it so that it had three funds. Each of the analysts then had their own portfolio for trading, and then there was a long-term strategic fund. And So APAC has an energy fund, it has a resources fund, and then it has its long-term strategic holdings. They operate differently. The trading funds are like any other trading company, where they buy and sell the equities, up and down without restrictions. Another issue with the Hong Kong exchange is that if something is considered a significant asset, you actually have to ask shareholder approval to increase your ownership or decrease your ownership of that strategic asset. So it's got all of these restrictions on what it can do with these companies. But the strategic holding is where APAC believes it has, where this is a strategic asset which needs a long-term focus to assist in its development or the generation of the best outcome or the best value for that asset, and that would benefit all shareholders.
So you think you like the way you interpret APAC is like they're just a very aligned shareholder that has the same intentions as
because it has these companies like Mount Gibson and MetalsX in its long-term portfolio. It's not having to trade them in and out, or it doesn't short. It doesn't have to trade them in and out like a fund would do. So it's there looking at long-term value of that equity. And that isn't understood by someone who wants to play day trading with the stock and hopes it goes up and down sort of on a cyclic nature. Yeah.
Can you share more about the strategic nature of the assets that it looks at, understanding that you haven't worked there?
They're based on the percentage value of them on the portfolio, because that's a requirement of the Hong Kong Stock Exchange, that if it's an asset which is above a certain percentage of your I don't remember what the correct term is, but on your balance sheet, if it's above a certain percentage, you can't trade it. You have to ask shareholders to buy and sell above a certain percentage change. So, but they are assets where they believed that a long-term strategic view of that as an asset was an important thing. Tanami. Tanami would have driven most people nuts in terms of the amount of time that's taken to get that project moving. But there's, APAC have been supportive of Tanami. It did again. It was before my time, but it had almost gone broke as well, and it was APAC which provided the funds for it to stay solvent.
Yeah. APAC owns north of 50-odd% of.
I don't know. I remember I said I'm not good with exact numbers, but it's a major shareholder.
Yes,
it's a major shareholder. Yeah.
Yeah, and the Tanami, interesting history, but this asset, it was a joint venture with Northern Star.
Yes.
Northern Star had done a deal not all that long ago to increase their participation in that JV by an extra 10%, and that gave.
No, not exactly. I actually negotiated the deal with Northern Star, the recasting of the joint venture agreement.
Yes.
Originally, it was a earn-in with the free carry, where Tanami had a free carried interest and Northern Star had to get the plant into production of so many ounces by a certain period of time to earn into its ownership right. Tanami challenged that because they weren't actually doing what they said, and there was a stalemate. So we renegotiated that joint venture where the free carried was dropped, and it was a 50-50 JV, both parties contributing equally to the development of the project, because I personally thought that was the stumbling block for the development of the project. And both parties contributed a significant amount of money. We were spending sort of $20 million a year plus as a joint venture on drilling in those areas. The reason it never really progressed was Northern Star wanted a much bigger project. They wanted a 3 million tonne per annum plus project. We would have been happy with the Tanami hat on of a 1.2, 1.5 million tonne project, refurbishing the plant, getting a cash flow, and then looking at. So they're both correct philosophies, but different philosophies, and each philosophy informs how you explore and what you allocate drilling for. If you're chasing, something that's 2 or 3 times as big, you're doing regional drilling to try to fill out what could be your potential ore sources. If you're trying to get an existing 1.2 million operation into place. You're doing focused drilling to develop a mine plan to get something into operation. So then neither's right or wrong. They were just different. And that's what, and both parties worked harmoniously and everyone was in support. But because of that difference, I don't think it fitted strategically what Northern Star wanted to do, hence the divestment.
And now MGX have real alignment. You've spoken in the past with your MGX hat on about that 1.2 million tonne per annum type operation, 100,000 ounces plus for an asset that will start producing in hopefully within 2.5 years or so.
Yes.
Importantly, MGX has the understand there'll be some cash costs associated with Koolan now, but I imagine there'll still be a lot of cash left in MGX.
Yeah, and Koolan's not as bad as we first thought. We've got significant low grade stockpiles on the surface, so we now believe we can, and they're 42-45% iron ore, so they're not crap. But we think we can sell those. People will blend that, so that's a bit more cash than we thought. We are in discussions with a couple of different groups as to take over the island as an asset for servicing infrastructure or tourism. It's very close to the Timor Sea oil platforms, so it'd make a very good base for much in it. And if you're in a helicopter and you want to rescue someone from a rig, it's maybe an hour earlier than it is from Broome or Derby to get there. So and it's also a strategic asset for the defence. So we don't believe we're going to have the full rehab costs, because we believe we'll be able to repurpose the island and sell it for a future use.
Gotcha. That'd be positive for Mount Gibson equity, which will be then focused on the development of Tanami Gold project in conjunction with Tanami Gold, both Tanami Gold and Mount Gibson. I'm sure it makes sense for those two entities to come together, but there are complications with the shared shareholding and directorship.
To merge with, it's actually harder with a common shareholder than it is that related parties issue means it's almost too hard. So there's no reason that you couldn't look at an asset level deal which had different percentages, adjust from 50-50. But I think in this gold market, Tanami are pretty confident that they can raise money to maintain their 50% ownership of the project.
Yeah.
And there's a Phoenix shareholding as well, 10% ownership of Phoenix,
which came about by a sale to Phoenix of critical infrastructure.
And Mount Gibson not only has it's that was some of the questions that came up at the AGM yesterday. Is it, what is this sudden jump? Is this just an opportunistic thing? Is it an APAC conspiracy thing? Why have you suddenly got into this? But Mount Gibson they've been looking at, possible alternatives, knowing that the island was going to run out for years. And they've got other equity stakes in copper plays in various places.
Substantial shareholding. Maronan.
Yeah.
There's a substantial shareholding.
Yeah.
True North.
Yeah. So
others?
There's a whole basket.
Yeah.
There's a whole basket of things. And the idea there was that if you get, it's similar to what MetalsX has done, was taking a strategic shareholding in First Tin or Elementos on a smaller scale, but a similar idea. So it's looking not just at the gold opportunity, but a number of copper and base metal opportunities in the sort of Queensland, central Queensland regional area, and again they're looking at projects which would be a sensible jump given their sort of bulk commodity mining operation, but there isn't many of them around. The Phoenix one really came on the back of the sale of that asset. And Phoenix is a bloody good operation. Really clever the way that they've married that IP of infrastructure, IP of transport and infrastructure into an iron ore mine to actually get a lower transport cost, which has helped them develop these isolated assets where no one else could have done it before.
Their haulage costs are gobsmackingly low.
And it's state of the art. If you ever get a chance to talk to them, you know, the changeover, the preventative maintenance, the satellite monitoring, the level of automation, or on the trucks to make sure that you don't have unplanned breakdowns. It's all really clever stuff, which has allowed them to do that. So they're really, really sharp operation. Yeah.
It's mighty impressive what they've done and the cost at which they can operate. I want to touch on Tanami Gold just once more, because when people run the numbers similar to MetalsX, they see the cash, they see what the market cap of the company is, and you've done the deal now with Tanami. That's clearly a key piece of it. What do you feel is kind of misunderstood about the value in the gold asset?
Well, I think joint ventures are typically undervalued, and there was just fatigue. There was investor fatigue with Tanami because it's been sitting there undeveloped for so bloody long. People got bored or frustrated with it. You know, there's been a couple of long suffering shareholders there who sort of seen what we're trying to do, but I think now there is a real opportunity to accelerate its development. It's not complicated. It's actually the plan that Tanami took to Northern Star is we put in an exploration decline.
That'll cost like
70 with the because you've also got to put all the surface infrastructure on to support it.
Yeah.
It's a cost which isn't lost because it opens up 6 or 7 levels that you could kick stope from.
Yeah.
And you're going to need a decline anyway once you start mining. Look at refurbishing the existing process plant or building as lower cost new plant as you can.
It's a pretty old plant.
It's a pretty old plant.
Yeah. Maybe build a new one.
Yeah, no, but
the
other value there is the permitting.
Yeah.
Because you've got the permitting for the tails, you've got the permitting for the process plant, you've got the permitting for the runway and all of that. To get all that again now is to do that. And we reckon you could get it into operation for between 200 and 250 million. You'd still have to spend another 200 in sort of sustaining capital to look at doing the non-essential post-production things like upgrading the camp and all of the upgrading the airstrip and some of the other bits and pieces. And then you're 1.2, 1.5 million tonne per annum, 3 to 4 gram a tonne producer.
Are there refractory concerns with
there is a significant amount of refractory ore, but that's been excluded from the modelling of the process plants. It's just the free milling stuff to start with. Yeah. You'd put in a POX plant later. Yeah. You'd leave space to put in a POX plant, and then you can bring in all of that. Jims is the exciting one. Just have a look at the last drilling results from Jims. That's going to be good.
And that's oxide.
And it'll be open pit.
Yeah.
Yeah.
Yeah. Yeah, interesting. To the stakes that Mount Gibson has in some junior miners or developers. So there seems to be a clear interest in some of that kind of Queensland, area with AIC Mines, Eloise, very proximate to Maronan, and then True North. Those are the three that I know that Mount Gibson either has or has had shares in the past.
And we don't really have a clear favourite. It's just we identified the guys identified that there was room to have a consolidation in that area,
right?
Where there's a number of sub-optimum sized base metal projects, which if someone could get their foot on a number of them and pull them together into perhaps a central processing plant, you'd have a different story. So that's kind of been the logic behind that, and it's now working through which is the best starting point to able to make that happen.
If I ask a bigger picture question in that neck of the woods, obviously Glencore has been in the news a lot, Mount Isa and everything. What sort of implication does that have, and how does that change how you think about those assets there?
It shows if you cry enough, the government will give you money.
Glencore's not the only one.
No, and this is interesting. This is something that I picked up in the Shanghai Metal Exchange thing with all of the smelters in China. People who just have a smelter struggle. So if you're not integrated upstream and downstream from the smelter, there's not a lot of money left in smelting. So I'm not surprised, when Mount Isa was a booming, operation with its own mines and all of its feed, the smelter was probably making a fair bit of money. Now it would be struggling to be fair. That was just a joke before. Now it would be smelting because it's really hard to run a smelter if you're not upstream and downstream integrated.
You hold that view across all metals in this day and age, base metals?
If you just have a smelter, it's hard. Yeah.
There's such value in the offtake then if you're a producer. So how do you think about MetalsX's offtake supply as well?
Well, we retender our offtake every year.
Yeah.
And we look at the lowest. We look at the best commercial outcome for MetalsX when we do that tendering. We don't like to have just one.
Yeah.
Like what happened with COVID when the Malaysians called force majeure. It's good to have more than one smelter, but we tender that every year.
So right now it's Malaysia and China. It was in years gone by also to Thailand,
Yes.
but that dropped off recently.
Yep.
What was the rationale behind that again? Just commercial?
Terms, yeah.
And circling all the way back to MetalsX again, let's talk about rentails because this is another potential use of cash, fair bit of capex, technological uncertainty, or do you think it's quite sure?
It's hydraulic mining. That's just pumping mud, fine regrind, and differential float, making a copper float and a tin float. It was more complex when the pyrometallurgical part was going to be in Tassie as well.
Yeah,
but we'll just make a commercial grade copper con, and we'll make a tin con of between 13 and 15%.
Yeah, and you still get good payability on.
Yeah, because it's the NPV of the project didn't change that much when we took the pyrometallurgical part out because that was fairly expensive.
Oh, a lot of the upfront capital.
Yeah, but also, we aren't in the Tarquine, but we're on the edge of it.
Yeah.
And so if you've got a bloody big stack, regardless of whether you've got good gas treatment or not, it's visible from that main road in and out of the Tarquine. It's not going to be popular. We would have had to bring in coal because coal is a reagent, coking coal is a reagent in the box fumers. To be burning coal in the sort of clean Tasmania branded area on the edge of the Tarquine was probably not not environmentally or from a stakeholder thing, a good idea. And there aren't a lot of pyrometallurgical people. It's hard enough to get float plant operators in Tasmania. To get pyrometallurgical people to run a box fumer, I don't think there's any other box fumers in Australia, would be difficult. So they're the reasons we decided to let Yunnan Tin build the box fumer either in Thailand or to reconfigure one of their ones in China and split the project in two.
I'd love to hear what the benefits of that partnership with Yunnan more broadly in the joint venture, and if you're willing to share any of the downsides of that structure.
I don't know if there's. As I said, it's a joint venture with a joint venture.
Yeah.
Yunnan Tin's one of the largest tin and base metal producing companies in the world, so we've got access to all of their technical knowledge. Their representative on the JV committee's got a PhD. They're good, collaborative, intelligent guys. So having access to all of that is a real benefit. They are keen on rentails, which is great. They need concentrate the same way all of the other smelters in China need concentrate because the grade in their mines is falling. So there's no issues with that. If there are funding issues where perhaps one of that joint venture didn't want to fund its share of rentails, then there could be some complexities. But there is a provision in the joint venture agreement which lets one party sole source the development of a new capital project. Yeah, and of course you have to pay something for the use of the joint venture asset, which is the tailings, but that's just a commercial net smelter royalty type thing that you have to negotiate. So if you took the scenario that MetalsX sole source the development of rentails, the existing joint venture agreement allows that to happen. And we would just have to agree a net smelter royalty associated with the tin and the copper that was in the tailings that we were processing in that sole finance project.
Gotcha. Yeah. Yeah. With Stella, one more time. So Stella, they've struck a,
They've looked at the old nickel.
They've looked at the Avebury nickel plant, which
Yeah.
which is a plant in need of a good ore body.
Yeah.
Are you worried that might find an alternative path to market that's not in the
I'm not worried.
Yeah.
No, if they do that, that's fine. Yeah.
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 It's probably not the most sensible. If it was me, I'd just put ore sorters in, crush and grind and sort and ship a beneficiated product to Renison. Much cheaper way of doing it than all of that. Yeah.
The ore sorting component is something they've looked at, although obviously incorporated as well.
Yeah.
Yeah.
We got sorters at Renison
Yeah,
and
you
they're
do.
working well.
Yeah.
Yeah.
Can we talk about the impact that sorters are, the application of sorters to?
They're not a magic bullet.
Right.
Everyone who just published puts out an ASX release saying that sorters have beneficiated their ore. Of course they're going to beneficiate their ore, but it still means you've got to have a project and an economic reason to actually be looking at sorters in the first place. Yeah, the technology works. They just change the sensors, and it works on most ore types for most commodities. Yeah,
I've heard stories about some of these sensors now, and like the tech sounds like it's come a long way, right? Like the ability to detect and also then like rapidly blow away.
You know where the technology came from?
Was it the Argyle diamond?
No. It started.
Agriculture.
It was treating municipal waste. So the municipal waste, the original Tomaron stuff was municipal waste sorting, where they had belts where the dump trucks would empty it in, and it'd sort out the metal and the cardboard and all of that. So that's improved. That was the genesis of it, and then
In what era?
I don't know, 30 years ago, 20 years ago.
Yeah. Okay.
Yeah, but now it's the same principle. You just need the correct sensor to differentiate the different streams, and the software to understand what you're doing. There's a bit of work in making sure you crush it to the right size and to screen it and to have it washed if it's a certain thing, but there's enough variation in sensing technology now, I think, to sort accurately most types of ore. But you do lose stuff. So when you sort gold, you may upgrade what you're feeding, but you do lose ounces. We've looked at it for the operations in Scandinavia, and we're going to put them in again now because we're capped in terms of the throughput of our flotation plant. Our permit's capped at a certain number of tonnes per year. So the only way we can increase gold production is to lift the feed grade. But we didn't put them in previously because we would lose gold through the sorting. You lose a percentage of the gold. If you could do you can't do heap leach anymore, but if you could actually feed your reject stream to a gold heap leach, would be okay. It's just you can't do that anymore.
Yeah. Renison, as we look at that asset today, like it's been producing a while. The plant.
Soon we'll publish a new life of mine.
Yeah.
And it's no shorter than our previous one.
Previous one was it 10 years?
Yeah.
So
10 years at mostly 10,000 tonnes per annum.
Yep.
Yeah.
Yep.
What are the constraints to output?
The existing float plant.
The float plant, yeah. And what are the mining constraints?
You could expand more fronts and you could mine more tonnes because we've got a hoist and a decline. When we bring on Ringrose is at a much higher elevation. So that if that ore body ends up being as big as it might be, that could bring, that you may look at another portal. At the moment, we didn't want to do that because we don't want additional surface disturbances.
Yeah.
So we don't have any additional permitting issues.
Gotcha.
So at the moment, we'll just cut a drive across and do it from underground.
Yeah.
But the mining has never been the constraint. But when we put in a fair bit of money to upgrade the ventilation, that was because it's a very hot mine. The groundwater comes out at 60, 70 degrees Celsius, so it's an uncomfortable place for people to work. So the ventilation wasn't for fumes or air quality. It was just to drop the working environment down so it was more comfortable or safer for people to work.
Gotcha. I'm just trying to wrap around in my head where the where the capital allocation decisions might be best at Renison itself. Is it ring rows?
Ring rows will happen anyway. We brought
Yeah.
ring rows into the life of mine plan now.
Okay.
With what we know of it. There is a hybrid rentails that we're doing a side study on, where instead of rebuilding the existing float plant, we actually look at a different comminution circuit and feed everything through a slightly different flow sheet for rentails. Yeah. Tin plants, if you've ever visited one, they have lots of separate little unit operations, each recovering 5% or 2% or 0.5% of the tin. You could clean that up with a completely different design plant from the very beginning.
Yeah.
So we may look at we're doing a sort of concept study now that if we changed the comminution circuit and then changed the float circuits, and we could probably eliminate 20 or 30% of the smaller unit operations that we have in the existing flowchart, which would debottleneck the existing process plant and give us some more throughput there as well.
Yeah.
What is the sort of cost of upgrading that float plant if you have to get pinned to a number on that?
Through upgrading the existing float plant.
Yeah.
In the life of mine plan, we've got, I can't remember which year it is, but we got 60 million in to upgrade the existing float plant.
Yeah.
Gotcha. And the
cells are very old. You know, we've kept them going with patches and really welded on bits of stuff, but they are very old. Yeah.
The grade variability over that life of mine, you kind of expect similar to what has been historically, or
well, we've got for the next 6 years, we've got fairly high grade stuff.
Yeah.
And we haven't really done enough drilling in the ring rows area, which is even higher grades than the high grade stuff we've got out of the existing mine.
And at current tin prices, how much cash are you adding a month?
Oh, I don't look at it on a monthly basis.
Quarter, yeah.
Have a look at our quarterly, but it's
a lot.
Yeah, it's a lot. Yeah.
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 30 to 50?
Yeah. Yeah.
Yeah. Interesting. Sounds like costs will stay
Yeah, you've still got base CPI inflation. Wages go up by 3%, 4% each year.
Yeah.
Power has been cheap in Tassie historically. Yeah.
I think
Cheap green power. Are you going to get a green premium anytime soon?
That was actually one of my questions that I tabled at the tin conference. Should we be worried about why that whole issue? I'm just being politically correct now. That whole issue about a green premium for metals.
Yeah.
When you look at what people were talking about, green premiums for nickel, and Indonesia just came on making this relatively dirty nickel, and you talk to the people and they say, well, we have to buy it for them because it's so much cheaper. At the ITA, I've also, at the tin conference in the UK, I also raised the thing that we just don't see a premium for green tin.
So am I right in thinking Oropesa gets $1,000 on, or that they sort of
it's a different smelter. That's a different premium. That's a premium. You know, with tin, they don't typically do swaps because there isn't a lot of tin production in there. You get a premium because you're not having to pay the freight costs of bringing the processed tin from another location to that location. So that smelter premium is what you get because you're producing locally and you have a much lower freight cost. It's not a green premium.
Yeah.
I sometimes laugh just thinking of the universe of listed tin stocks because you don't need to count very much to go through them. There's really two options for investors to choose because people aren't buying GreenTech.
And it depends whether you prefer Tasmania or the Congo.
Exactly. And well, people
if we simplify the argument.
Yeah. But there are the development companies. Now, to be fair, you know, the Stellars and the Elementos and the First Tin and some of the other guys, they will get into production in the sort of, 2 to 8 year time frame. None of them are really big.
Cornish
Cornish, yeah, mate, to be honest, I'm a bit behind on Cornish.
Yeah.
They sent me a pack to have a read recently, but I just haven't had a chance to have a look at it. Yeah.
That's the only one that probably has the volume of tons that is like meaningful. Yeah.
Yep.
But yeah, your perspectives on the whole universe are really valuable. It's a Rome Resources is a tin project as well. Yeah, is that any good?
We haven't bought any.
Okay.
Yeah.
I'll take a look at it.
Yeah. There is a whole central Queensland tin belt.
Yeah.
Which there's 3 or 4 people sort of marketing projects at the moment, and then around the area that there's another one in central New South Wales out the back of Orange. What's that one called?
I thought that was First Tin.
No. It's very similar ore body to
Sky Metals.
Sky Metals.
Yeah.
That's probably it's not as far along the pathway as the First Tin guys are, but similar sort of project and should work with a similar sort of flow sheet. I went out and had a look at it.
Yeah.
They're doing all the right things.
Yeah.
It's just a little bit early in the development cycle for us to get involved. Yeah.
Yeah, that makes sense.
Yeah.
That makes a lot of sense. Brett, is there anything we haven't talked about today that you think we should have gone into detail on?
How do I get a T-shirt?
We've got actually might have something.
We can make that happen.
Yeah. Okay, guys. No, great chatting with you. I hope that has helped a bit understanding tin. I hope it's helped a bit understanding sort of APAC and their strategy as well. And
I think they're not
fun.
The boogeyman is like a takeaway, and I've had that perception in the past. But I can see the strategy. I can see how they're aligned with other shareholders. I can see that maybe dividends aren't always what you should expect, but that's okay because there's a thoughtful long-term growth agenda that might actually be benefit from the optionality of that cash
APAC
balance.
pay dividends.
Yeah.
The head code they pay dividends.
I don't buy shares in APAC. I'm on ASX.
I think for people participating in the ASX in the resources space, it's been a super helpful conversation to help fill out players in the market, miners in the market that are they've been kind of ever present. They've been there for quite some time. So appreciate you making the time for us, Brett.
Cheers, guys. Thanks a lot for the opportunity.
Thank you very much.
Cheers.
Mate. Much
Thanks.
appreciated. We've got some big partners that we could not do this without.
Sure do, mate. Sandvik Ground Support, the legends, check them out. Details in the show notes. Focus, the platform by Market Tech. Check out the wicked platform that they have put together, a local Aussie team doing God's work.
Mate, it is a great place to trade, to dissect, to analyse. It is it's a institutional platform at a retail price. Thank you, Focus.
It sure is, and there's a free trial in the show notes as well. And last but not least, Intralinks. Check out those legends as well.
Hootaroo, mate.
Hootaroo.
Now remember, I'm an idiot, JD's an idiot. If you thought any of this was anything other than entertainment, you're an idiot and you need to read our disclaimer.